General Motors stock sinks 7% on the news of President Trump's auto tariffs announcement. President Trump says he will slap 25% tariffs on all cars that are not made in the U.S. by April 3rd, and then auto parts by May 3rd. We are fielding mixed reaction, with investors shaky on the news and the UAW praising it. Automotive news reporter Michael Martinez covers the UAW and Ford. Michael, thank you for joining us here at 5.
Thanks for having me.
Yeah, as I mentioned, we saw GM stock drop in early trading upon the announcement from Trump. How does General Motors compare to Ford and Stellantis in terms of the U.S. production and assembly operations that they have?
Well, GM really stands to suffer the most compared to the other two Detroit automakers because they import the most vehicles to the United States. They do build a lot here, to be fair, but they're also bringing in vehicles from Korea, from Japan, obviously countries like Mexico and China as well. And you look at what they do build in Mexico, popular, profitable models like the Chevy Silverado. And coming from Korea, you have more affordable products like the Equinox and the Trax. So it really runs the gamut in terms of the price spectrum, but they have a lot coming in. And if you add a 25% tariff onto all those models, it's going to cost them a lot of money.
And retooling plants does not happen overnight. In fact, I'm wondering if U.S. automakers can move significant amounts of production back to the U.S. quickly.
In theory, even if they were to start doing that today, it would take years before we would see the final results, maybe even beyond President Trump's term going into early 2029. So that's unrealistic in the short term. What you could see, again, theoretically, nobody's announced anything yet, but there are a number of plants in the U.S. that are underutilized, that are maybe running 1 or 2 shifts when it could support 3 shifts. That might be an option for automakers to increase production of certain models or bring back in production from other countries to plants that they're not using to their full capacity. That might be more realistic than starting a new facility or reopening a closed facility from scratch.
Now, you report heavily also on the UAW, and the UAW is praising the tariffs. They're praising the president's efforts, calling it, in part, quote, the end of NAFTA, which they say has devastated working class families for decades. Could the tariffs lead to more hiring? You mentioned maybe more shifts in some of the plants, which was what I was wondering, but do you think that this will be a short-term benefit for them?
That's what their hope is. They see an opportunity for the automakers to add more shifts, to open more plants, and to hire more UAW workers. Whether that happens remains to be seen. It could have the opposite effect if these tariffs do indeed significantly increase the price of vehicles. That could harm the workers in these plants. They may not be able to afford the products they build. Likewise, if the companies don't pass on those costs and decide to eat the costs themselves, their profits are going to go down, and that would affect profit sharing checks that UAW members rely on, and it could lead to layoffs at the plants that are open right now. Again, all this is theoretical. We don't know exactly what will happen, but it may not be good news. It may not be what the UAW hopes for.
What are your sources telling you about the long term and the UAW's outlook on it?
Well, the UAW is really taking this stance, and it's a stance they've had for quite some time. They don't love free trade. They're really hoping to long-term renegotiate the USMCA trade agreement and have a seat at the table when the Trump administration makes changes to that trade agreement next year in 2026. So what they want is more protections for American workers, and they're hoping that by agreeing with the Trump administration here, they can sort of get in their ear a bit and get a seat at the table when the changes come.
I know it's hard to have a crystal ball, but what's the average price hike you think customers could see if they go buy a new vehicle after these tariffs go into effect?
Yeah, according to a lot of the analysts and the Wall Street people, it could be thousands of dollars. It could be as much as $10,000 in some cases, maybe even a little less, but it would be noticeable. There was one analyst that came out today and said the price on the average lease could jump about $90 per month, going from about $750 per month to $840. That's not nothing at a time when the American consumers already being squeezed and sort of hurting and looking for some financial relief.
Yeah, a lot of people are wondering what that will do to their monthly payments. I really appreciate your time, Michael Martinez, reporting for Automotive News. Thank you for joining us here.
Thanks for having me.